So, you've got that light bulb moment, an idea that just might change things. But how do you take that spark and turn it into a real, actual company? Well, that's exactly what we're going to break down right now. We're going to walk through the entire journey, step by step. You know, this is the question every single entrepreneur runs into. You could have the best idea in the world, but there's this big gap between just an idea and a real legal business. So in this explainer, we're going to build a bridge across that gap. All right, here's our game plan. First, we'll look at the big picture, from idea to corporation. Then, we'll dive into the first crucial step, promotion. After that, we'll cover how to make it real with incorporation, look at the super important documents you'll need, and finally, wrap up with how public companies get the fuel they need to grow. Let's get into it. Look, turning an idea into a corporation isn't some single magical event. It's really a process with 3 distinct stages. And once you see these 3 stages clearly, the whole thing starts to make a lot more sense. The best way to think about it is like this. Promotion, that's the blueprint phase. It's where you plan everything out and see if the idea can even work. Then you have incorporation. That's the actual birth of the company, when it officially exists in the eyes of the law. And finally, capital subscription. That's the fuel, the money that gets the engine running and helps it grow. So let's start at the very beginning, with the promotion stage. This is all the homework, right? It's the critical groundwork and research that happens way before you file any official paperwork. This is where you find out if that brilliant idea of yours actually has legs. And who's doing all this early stage heavy lifting? That would be the promoter. A promoter isn't just the person with the idea. They're the engine. They're the one who takes that idea, analyzes it, starts pulling together the resources. They are literally the architect of the whole enterprise. Okay, but here's the million-dollar question. Is the idea actually viable? I mean, not every good idea makes for a good business. Promoters have to be ruthless here and run some serious feasibility studies to see if this thing can actually survive in the real world. First up, you've got technical feasibility. Let's say you're like Avatar from our source material, an engineer who invents a new fuel-saving carburetor. Awesome idea. But what if it needs a special kind of metal that's impossible to get? Well, if you can't get the parts or the tech, the idea's dead in the water. It's a basic, fundamental reality check. Next, you have to look at financial feasibility. In other words, the money. Every single project costs something. A promoter has to figure out exactly how much cash is needed to get this thing off the ground. If your idea costs $1 million and you can only realistically raise $10,000, well, the math just doesn't work. And finally, maybe the most important test of all, economic feasibility. So you can build it, you can fund it, but will anyone actually buy it? Is it going to be profitable? If there's no real market out there, or if it costs more to make than you can sell it for, then it's just not a viable business. All right, so your idea passed all the tough tests. It's viable. Now comes the exciting part, the magic moment, incorporation. This is the official legal process that brings your company to life. This is where it stops being just an idea and becomes a real, separate legal entity. Now, to make it all official, promoters have to file a whole bunch of important legal documents with the government's registrar. And these aren't just forms, you know. They're like the company's DNA. You've got the Memorandum and Articles of Association, signed consent from the people who've agreed to be directors, a legal declaration saying you've followed all the rules, the whole shebang. After the registrar has looked over all that paperwork, there is one single piece of paper that changes everything. It's the entire goal of this whole stage. So, any idea what it is? This is it. The Certificate of Incorporation. You can literally think of it as the company's official birth certificate, and it is incredibly powerful. From the exact date printed on this certificate, the company is legally alive. And that fact is considered conclusive. It doesn't matter if there were tiny mistakes along the way, this certificate proves the company is real. Okay, let's zoom in on those 2 documents we just mentioned, the Memorandum and the Articles of Association. These are so important because they're basically the company's constitution and its internal rulebook. They define everything about what the company is and how it's going to be run. So what's the difference between the 2? It's actually pretty simple when you break it down. The Memorandum of Association is for the outside world. It's the charter that says, here's what our company does and why we exist. The Articles of Association, on the other hand, are for internal use. They spell out all the rules for how the company is going to be managed day to day. Inside that memorandum, you'll find these super important sections called clauses. You've got the name clause, pretty obvious, it's the company's name. Then there's the objects clause, which is critical because it defines everything the company is legally allowed to do. You also have the liability clause, which protects the owners, and the capital clause, which sets the maximum amount of money the company is authorized to raise. So the company is born, it has its rule book, but it can't run on air, right? It needs fuel. And this brings us to our final stage, raising capital. Now, this is a step that really applies to public companies, the ones that want to raise money from you, me, and everybody else.
And you can bet this process is heavily regulated. First, a company has to get the green light from the securities regulator, CB. Then, they file a document called a prospectus. They line up banks and brokers to handle all the applications, and they have to apply to get listed on a stock exchange. Only then can they actually allot the shares to all the new investors.
Now, out of all those steps, there's one rule that is just huge. It's called minimum subscription. This is a massive protection for investors. Basically, the law says a company has to get applications for at least 90% of the shares they're trying to sell. If they don't hit that 90% mark, the whole thing is called off and they have to return every single rupee. And the key document for all of this is the prospectus. You gotta understand, this isn't just a glossy ad. It's a serious legal document. It has to lay out all the important information about the company, the good, the bad, and the ugly. The entire point is to give potential investors everything they need to make a smart, informed decision. So there you have it. From a spark of an idea, through all the tough feasibility checks, the legal paperwork of incorporation, and finally to public funding, you now have the full blueprint. You know the steps. The only real question left is, what are you going to build?